Hey guys, Jason here for TheChartGuys. I want to take a look at PLTR. I covered it in a video a week or so ago, and the action didn't quite follow what we expected to see, but the trend lines that we were talking about remained in place and they became important in the days that followed. So what I want to do in this video is a little bit of an exploration in trend lines as it relates to PLTR. We're going to take a look at how we assess the existence and placement of the trend lines, why they were useful for us both during and outside of the trend, and how they remained important until today. And we'll get started by talking about recognizing trend lines in the first place. So as it relates to PLTR, we see that we are in an hourly downtrend up until about January 6th. And then something changes. We get higher lows, and then after 25.19, we start to get higher highs. Where we start to look for the existence of a trend is when we have a low, we see a trend change, and then we get these violent moves where we have a low down to 24.13, a big move up, and a clear rejection, and we start to see that we follow really the path of a river, where the river winds back and forth and hits these areas of resistance. Now we need to expect and really speculate that these areas become the banks of a river. We have no idea where inside the river is going to flow, but we do have a good idea that we've got some walls of resistance on either side. And that's the illusion that I use when I am thinking about trends like this. And I found a really nice picture, an example. Looking at the Grand Canyon, we know we have big resistances and supports, if you want to call them that. And we know that somewhere along the bottom of this valley, that river needs to go. It's going to go back and forth. It's going to look a little chaotic. At times, we have no idea what it's going to do. But if it's hitting one bank, it's more than likely going to head back toward the other bank and bounce around inside the contained range that confines the trading action. And that is what I look for when I'm trying to determine, are we in a trend? Can I trade with this trend? And is it useful? So once I start to see higher lows and higher highs, I know we have a price action change, trend change. Can I draw a channel? So when I'm trying to draw a channel, what I'm going to do is start on the supporting line. I'm going to grab the bottom of this red candlestick over here. I'm going to grab this candlestick over here. And I look back and say, does this work well with the data that I am seeing so far? And you know what? It contains these lows for the most part. I'm okay with trends dipping below because this is going to be an hourly resistance. That's all I care about. Do the candlesticks close above the support line, and do they close under the resistance? Now when I'm going to be drawing a resistance line, I've got the first side of my riverbank. I know where my river is flowing, but I want to contain the other side. I want to draw in that other resistance. Now, I don't really know exactly where it's going to be yet, but I can speculate that the river has hit an obstacle and has reverted course. When I do that and I draw on the top of this green candlestick, I'm really only picking one point of contact. It seems to correlate pretty well over here, so we're going back to that river illusion. We've sloshed up against one side, we got close to it, and then went back toward that support line. So the illusion stands. We have a nice bank on this side, we have a nice bank on this side, and we can see the river flowing back and forth inside this overall channel. And that is really how I envision the market. So when I'm watching this drop down and I'm expecting it to hit that bank has to be support for me. If it's not going to be support for me, it's going to be resistance. And I think this is where we left off in the video last week. So what I'm going to do is just walk through this chart as it develops. I know eventually we get outside of this channel, but let's look at the behavior of the price action as we're moving around in here. Now we see a drop to low. So we are now hitting the side of the riverbank. The most likely outcome is not that we're going to punch through the riverbank, especially when we are 5-minute oversold. It's more likely that we are going to see a bounce in the other direction. So we hit one side of the river, we're going to go back to the other side. And this is going to work until it doesn't work anymore. And we can really generally easily recognize when that happens. So let's keep watching and waiting. You know what? Look at that big move right up to the riverbank. We're hitting back and forth. We come down again, testing, grinding. Now this is where we left off in the video that I did last week. And this is something I want to talk about because the hourly trend has held so far. So this has come into play as a support for us many times. The key here is always closing above the area of support. If we happen to open below, we would be in somewhat serious problems because as reliable as this has been as a support, it's also going to be very reliable as a resistance. Imagine the river somehow waking up on the wrong side of this cliff. It's been reliable before. It's going to be reliable again. It's going to take a lot of effort to get through. So what I want to do is jump to the 5-minute time frame, and let's see what happens when we open on the next day underneath this area of support. So skipping ahead a little bit, we can see in the 5-minute time frame, we spent the vast majority of our after hours hanging out underneath this level. Why that's important is because if we look at the hourly time frame, now you're going to get a little sneak peek at what happens. Underneath on the hourly time frame, we actually break below, we close below for the first time, and then we back test, get rejected, back test again, get rejected again. Now that big wall that was our friend is now our obstacle, and it's going to take considerable effort to get through that. Going to the 5-minute time frame, we can see that in play. Look at the bulls grinding against this area of resistance. Finally, we get the open, we get the briefest of tests. Inability to break over 25.65, a loss of 25.20, and we see the bears pour on the action. Okay, a lot of bear volume coming into play. Why? Because we have broken outside of this channel. Everything that we have relied upon so far is not working for us. And anyone who's entered in a long position here is looking to cut losses and get out of this position, taking with a minimal risk exposure, is going to sell, take a loss with the expectation of downside continuation because we have fallen out. We have no idea what the river is going to do. We've lost confidence in the course of this waterway or this trend or this channel, however you want to call it. Now, the only saving grace here is using our price action. We can go to the 4-hour time frame and we can maintain 4-hour higher lows. If we can do that, we're going to be okay. 24.23, 4-hour higher lows. Bulls must keep this level intact in order to keep things moving. Going back to the hourly time frame, let's take a look at what happens. We managed to hold this, and that is as best the bulls can hope for. Now at this point, things get a little bit interesting. And they get interesting because we had some outside influence in the form of ETF inclusion that causes PLTR to see a little bit of a spike in interest. Because I believe it was ARK is interested in this ETF. They've announced they have an interest in including in their package. PLTR sees a strong open that follows the next day. So let's zoom forward and see what happens. There's that news. There's the higher price. Bulls have re-entered this pattern now, and they're closing back up inside. Now that's great for the bulls. Suddenly we're back into the river where we're comfortable. We can no longer really rely on this area as an area of support and resistance because it has failed to act as support for us before and has acted as a resistance for us yesterday, but now it's sort of ambiguous. But what's important is that this resistance line is still very much in play. So if we go to the 5-minute time frame, actually, why don't we just go to the open? Because we are real close. Let's go to the 5-minute, yeah. So we're going to move forward. So we have now opened. We've back tested this former area of resistance, now again an area of support. Bulls have re-entered the pattern, and now we're going to see what they're able to do with this resistance. If we're going to have upside continuation, this is still going to be an obstacle for us. It's proven itself to be an obstacle so many times, I don't see why it's not going to be an obstacle now. So we hit the 5-minute time frame, we're moving forward, we see some volatility, we get 5-minute overbought conditions against a known area of resistance. What is the likelihood that we're going to see straight continuation? It's probably not that great. So let's take a look. Let's zoom in right on the 2-minute time frame to get that action. So jumping to the 2-minute time frame, there's our run up. We're 5-minute overbought. We're 2-minute overbought. What we can do is play a little price action magic. We're going to look for the loss of 2-minute higher lows. In this case, a loss of 27.53. That's going to usher in some downside because why? We are against a major area of resistance. If we go to the hourly time frame, we're getting close to hourly overbought. In an uptrend, that is the area you're going to be taking some exits. You want to take entries in the area of 50 to 45 RSI. You're going to be taking an exit in the area of your resistance or your overbought conditions. See how many times we've managed to peak up against this resistance with overbought conditions, signaling the reversal, signaling the fact that we're ramming into that obstacle yet again. 2-minute time frame PLTR. We have a little bit of a 2-minute bull flag. Loss of 27.53 is going to cause an issue for us. And in fact, we see that price come all the way down. And we sort of ruined that day. It's important to pay attention to your trend lines. It's important to pay attention to your channels. Know where your obstacles are. Know what the most likely outcome is. Play your overbought, oversold conditions against those trend lines. Watch where your hourly candles close if you're playing an hourly channel. And just be very, very cognizant of the fact that we are in an unpredictable river And all we can really rely on is evidence of price action through changes and the existence of former supports and resistances acting as the same time and time again. Hopefully this is helpful. If you want to learn more about it, check out ChartGuys.com. If you need any clarification, feel free to ask in the comments. Have a great day, and thanks for watching.